Oh man, a painful week for Bitcoin leaves us getting rejected from the weekly EMA ribbon. Plus, Jerome Powell set to speak next week. Things are looking much worse here for the crypto markets, and I want to share with you a warning because there is pain ahead, and it's important that we are prepared and understand the risks to the downside. You can see here last week we had a good week bouncing from our blue colored line here, the 200-week exponential moving average, but we just got rejected here from our EMA ribbon. You can see intra week here before the FOMC meeting, we were nicely well above our EMA ribbon, right? We ran up as high this week as 27.5k, now back at 26.5k because markets understood that rates will be held higher for longer, and this is going to be the key theme which keeps us penned here and stopping us from rallying to the upside. Again, very important to understand and reiterate that this is not a crypto-specific issue. This is a market-wide issue to do with the Fed, to do with Jerome Powell, to do with the battle against inflation. And that has just taken another turn, which suggests that we're going to be in this tightening cycle for longer. And one thing we do know, the longer we tighten, the worse it is for Bitcoin and risk on assets. If you take a look here, dollar index continues set to close its next week here. Look how many consecutive weeks here to the upside. Hugely powerful move here, showing that over the last few months here, since July, markets have said drastically we're shifting to more risk off. Not good for Bitcoin. And you can see here Bitcoin is getting rejected from this EMA ribbon, and it'll be silly of us and very not prudent of us to prepare for lower price targets. You'll remember with this structure here on the charts, I said to you guys, okay, we've managed to nullify the M pattern, right? But if you look at it, this M pattern can easily come back, right? Look at this. This is the M pattern, right? And we managed to bounce and get away. But if this bounce doesn't break above the previous peak here, then it's all pointless, right? If we curl over like we're doing now beforehand and we just lose momentum, we're just going to break through the neckline. Just took a little bit longer. Then we're going to still carry on all the way to our price target, which can bring you as low here as 17.8k. Yeah, I know it sounds crazy, but we could be in for some more pain here, guys, or at least more volatile sideways action here in the market. And I'm talking for a while, 6 months, 8 months, 9 months, 10 months. Why? Because Jerome Powell and the Fed this week, if you haven't watched my videos from earlier in the week, I'm going to link them up for you guys, but you need to watch those. What basically happened this week just gone is Jerome Powell said, we're going to keep rates higher for longer. We're not going to cut as much as we previously thought. We're only going to give 50 base points of cuts next year. But the reality is markets are like, okay, what if we don't even get those 50 base points next year? We could be in a position where we're not getting cuts until the first quarter of 2025 and maybe never see a cut next year. And that's getting hugely worrying for markets. On top of that, Jerome Powell and the Fed kept the optionality of one more rate hike this year. So we got the immediate concern of maybe even having one more rate hike this year, taking us to 5.5 to 5.75 on the Fed funds rate. So that is why we're sitting here and struggling here on crypto. Yes, we have the Bitcoin halving coming next year. That should give us a good tailwind. But at the same time, until markets start loosening, until Jerome Powell's our friend and printing money and turning the money printer back on and increasing liquidity into the market, crypto is going to struggle. And so when we look here, you have to understand and not deny the facts of the situation which we face ourselves in. And that is that we were below our EMA ribbon. We stayed below it for 4 weeks. We had a strong week last week, and we had a week this week, which is closing as a doji candle, which you guys should be familiar with. Ijaz.uk/TA if you're not familiar with that. And by the way, if you want to trade in these moves, guys, with us in the community, I give free trade signals in our Telegram group. Yep, Ijaz.uk/TG. You're going to see exactly how I trade, the setups, the patterns I'm using, when I enter the trade, how I set my step losses, and I'm doing it for education purposes. So you can jump into that Telegram group completely for free. Make sure you sign up using Bybit, Ijaz.uk/Bybit, claim your bonus, and you can get started trading today. But look at this, running into the EMA ribbon, this is now a problem because if we get pushed to the downside here, it could be quite a painful setup to the downside. I also want to bring out the Bollinger Band, which is another metric we use in the TA course, Ijaz.uk/TA. You can see here we bounced from the bottom, but we're already getting rejected here from the central line. Remember, the central line acts as support and resistance. See here how it held as support and bounced to the top, and then we lost it here. Similarly, right, it could reject us from this area and send us back down to create new lows here, which could be quite painful here for Bitcoin. So in the immediate term, my eyes will be focused here on this dollar index. what's going to stop it, right? If you look at it now, if I bring out the EMA ribbon on the dollar index, you will see that it's crossing over, right? The EMA ribbon here on the dollar index is going through its flippening, where the lighter colored lines are crossing above the darker colored lines, and it's going from a bearish state, right? This is a bearish state into a sideways state where it tried to reclaim it, failed, tried to reclaim it, failed, and it's just broken straight through it. So now the lines are going to start crossing, and they're going to try to expand, and as they expand, it shows a more powerful bullish move, and that's exactly what it did in this last move, right? A nice big extended move, and that created a lot of pain for Bitcoin and crypto markets, the Nasdaq, risk on assets, and probably will be seeing the same here, right? You have to understand that when interest rates are going up, all valuations have to reset. The way companies, for example, are valued, like a Tesla or any of these risk on assets, they are valued using discounted cash flows. And when you increase interest rates, I know it's getting a little bit complicated. When you increase the interest rates, that brings down the net present value or the value of the company today. So all valuations of companies now actively will be getting reset in the market, and that leads to market cap falling in major asset classes, risk rotating off. Let me put it another way. If you can sit right now and comfortably get 5.1% on a 2-year government bond, why would you sit in a volatile asset class like Bitcoin or Tesla or any other risk on asset? You're getting 5.1% for doing no money and taking risk. Remember, everything when you're at a certain net worth is about risk-adjusted returns. I know for some of us, maybe it's just, no, we just want maximum returns, right? We want to build wealth. But once you hit a certain level of wealth and you're trying to preserve wealth, which is what one day you guys will be doing as well as you build your wealth, you want to then preserve your wealth, right? If you've made your first million, you want to preserve it. You don't want to go back to square one again. Then you look for risk-adjusted returns. And that's what all market participants do. They may love Bitcoin, but they've got to weigh up the returns versus the risk. They may love being invested in Tesla. They've got to weigh up the risk to return. And the risk-adjusted return right now is so favorable in a 2-year government bond or a 10-year government bond. And for that reason, we're seeing the risk rotate off. That leads to more demand for dollars because people want to hold the bonds, and therefore you start to see dollar index move here to the upside. So just wanted to explain that for you guys. This week, we've got an important week, okay? Very important week. Q2 GDP coming out. Remember, markets here are pricing in that we're still going to pretty much get a pause at the next meeting. But can you see this? A quarter of the market are now saying, okay, Jerome Powell probably will do one more rate hike on November the 1st. So we've got about just over a month before this meeting here, and markets are starting to price in this notion. Remember, markets are going to have to reset. They're going to have to unwind any potential rate cuts, which they had priced in for next year because they've just been cut in half by the Fed. And they're going to have to price in that we could get one more 25 basis point this side of the year as well. On top of that, we have Q2 GDP coming out, okay? So look out for the Q2 GDP figure, which will come out later this week. We also have a very important Jerome Powell meeting. So Jerome Powell will be speaking on Thursday as well, so look out for that, as well as a bunch of other Fed officials. So lots going on here in this market. I'm personally looking out for and preparing for lower price points, and the initial levels I'm looking for have not changed. Remember, we fell out from this channel, and this is a structure I've been using, right? So I'm expecting sooner rather than later a revisit of the neckline, and that sits at 24.8, and probably at that level I'll do a small nibble. But we've been there once before in June, and we've been there again here in August. So I won't be surprised to see us touch it here again for the third time. And the question then is, are we going to lose that? Remember, the 24.8 is the first pivot point falling from this channel. The next pivot point brings you down to this level, which is around the 19,900. Call it 20,000 level here. Okay, so 20,000 is the next level I'll be looking to nibble. If we fail that level, then I'm looking for my third nibble here. The deeper price point is at 16.3. Now, I know that's a bit far-fetched. It probably feels a little bit scary right now, but that's the structure I'm looking at. Because if this starts to curl over, those other price points will start to come into play. So there you have it, guys. Things are painful, things are messy out there, but you've got to be pragmatic, you've got to let the data lead you, and you've got to have a game plan. If you appreciate this type of content as and when it matters, even on a weekend, smash up the likes, don't forget to subscribe, don't forget to go watch this video here, and I'll see you in the next one.